Good stuff. So we're going to start off today with a question. And real quick, let me just... we got a question here on Ali. Says, I believe it was Ali. Akil, well, two questions. Another one came in. Akil, how do you handle a situation where there is a lot of overlapping levels of structure and you get an entry signal on the first level, but you cannot stretch your stop enough to get beyond all the levels of structure? Well, there are two ways I handle it based on different strategies of trading, right? So if this is a purely structure-based trade, and again, when we're talking about overlapping levels of structure, let me see if I can find an example. If any of you guys know one here's one right. Oh, there we go. Perfect. Right here. Look at that. So let's look at this level. I'm on Euro dollar 4 hour if you guys want to pay attention, right? So you can see our VS1 levels, right? Visual support and resistance, right? One of the cool things about this that I love, again, is that, hey, if I have my chart zoomed in like this, I probably don't see these. And let's be honest, we talked to you guys about top-down analysis and perspective and zooming out and getting a view of Earth from space. But to be honest, right, and let me know if you've been here, every once in a while we go on a chart and we kind of just have a recency bias. We kind of just zoom into like the most recent like day, week, month, depending on your time frame. And sometimes we miss stuff, right? It happens all the time. Sometimes we don't have enough data loaded up. So one thing I like about these VS1 levels is that it gives us these reminders. But let's take a look at this level right here. I think we can agree this is a good example of over or underlapping levels of structure where we have three. See, and the voice is starting to go already. I started off strong and petering out in 5 minutes. We have three levels of structure right here, back to back to back. And the question is, how do you handle a situation like this? So if I'm a structure-based trader, so I'm taking a CTS type trade, a structured trade, right? I cannot take the trade if I am not comfortable with my stop loss. So in order to take the trade, we know we need three things, right? What are the three things we need to be in alignment to take a trade? Type it in. EST, right? We need those three things established. Ha 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 ha. See? Entries, stops, and targets, right? So I need my entry. I need my entry reason, whatever that may be, to get involved in the trade, pin bar, limit order, higher high, higher close, double top, whatever it has to be. I need my targets. So and by targets, meaning I need a price needs to have enough room to move. So kind of like we talked about in Monday's Q&A episode, there has to be room for price to go, right? There's no point of taking a bullish trade, if there's no room for price to go in a bullish direction, because we're putting ourselves in an impossible situation where we can't win because there's nowhere to go. So I need that. And I need stops as well. I need a stop loss in a safe and protective place. And for me, a stop loss goes in a place where price tells you that you're wrong, right? And in that area where price tells you that you're wrong, you want to have enough breathing room to be for the market to play those little games where it's like, hey, I'm going to tease you and pretend I'm wrong, but actually be right. But you don't want it far enough away that you take a bigger loss than necessary to be wrong, right? It's a very interesting dynamic, stop losses, because it is, we talked about kind of the whiskey and drinking too much whiskey and passing out, which was a joke, by the way, if anyone's listening and taking me seriously. But you got to find that balance in your stop loss where it's like, hey, I want to give myself enough breathing room, but I also want to be wrong sooner. And as far as professional development goes in the world of trading, what I've found in my personal career is that the things that change the most about your trading are the ESTs. It's not necessarily your trading style. So if Cherry is a daily chore trader, she may trade the daily chore all the time. But as she grows as a trader, what she may change is she may figure out better ways to take stop losses. She may figure out ways to kind of get that stop loss a little bit closer without putting herself in more harm's way. Or she may find a way to kind of increase that target a little bit more. I don't know if you guys heard the interview I did with Michael Lamott the other day. I think it was called Trading Traps and something. but we're having a conversation on his goals and development, and it's the same thing, and where he puts a big emphasis on tracking his average win and his highest win, which is basically maximum favorable excursion. So he wants to see how far price goes in his favor before it reverses, and he slowly wants to kind of get his targets further to that point, closer to that point without sacrifice. And same thing for stop loss, which would be maximum adverse excursion. He wants to kind of get his stop loss a little bit shorter to that point where it's too short. So I need all those things to work in order to take a trade. Now, when we have a trade with underlapping or overlapping levels of structure, right, the entries could be fine. Boom, we can get the entry signal. The targets could be fine. There could be plenty of room to maneuver. But the problem I may have is with the stop loss. So if I'm taking a trade, let's say at this first level of structure, right, and I'm putting in a stop loss, and my stop loss is right here. And this is going to be, again, there's not a right or wrong way to do it. It's going to have to be a personal decision you make. I'm not comfortable with my stop loss being right here, right? Now, why would you guys say that I'm not comfortable with my stop loss being right here? You could be, right? Doesn't have to be you. This is me. And you guys know me very well from spending entirely too much time with me here on a daily basis in a live room. But why would I not be too comfortable with my stop loss here? What is the backbone of my trading philosophy? The backbone, right, the spinal column of my trading philosophy is structure. And my stop loss is right at a level of structure, not beyond it. So this stop loss, I don't feel like this stop loss gives me protection. It may give me protection from this level, but it doesn't give me protection from this other level of structure, which is right underneath it. And when I see overlapping levels of structure, I always believe that the lowest one is going to be touched. And I've learned that from personal experiences of having stop losses touched and suddenly smartened up. So if I have a situation where it's like, okay, well, can I avoid this? I can't put it down here, right? Because now my risk reward is messed up. And you guys know me, I can't move my targets, because why would I move my targets further to a place that I don't actually think price is going to go just to make a trade work, right? Does that make any sense? Just to kind of go off on another tangent real quick. Something that I never get with traders is this. And let's say my initial target is here, right? My initial target is here. Or let's put it a little bit lower to make this work. Let's say my initial target is here. And let's just make this red real quick. Ooh, no, red, green for targets. If my initial target is here, and hopefully this kind of puts to rest some of the thoughts that you guys may be having. This is my initial target. This is my stop loss. So let's say I'm in a situation where I have to move my stop loss to put myself in a safer position. So I want to get it down here. Well, now I have an inverse risk reward. So what you'll see traders do is this. Okay, well, because so many traders are caught up on the wrong thing. So many traders, and you guys have probably seen this, so many traders are caught up on the, risk reward. I need a 1-to-1, or I need a 1.5-to-1, right? They fall in love with these numbers because they don't really know how to trade, but they hear stuff that they think makes sense and they fall in love with it. You guys ever have conversation with traders like that where they fall in love with this one term? They don't actually know what this term means, but they do it. So I see so many traders out there was like, I got to get a 1.5-to-1. I got to have 1.5R, right? But they don't actually understand what it means, but they don't actually understand how it means as far as practical application. So you'll see a trader do this and be like, okay, well, my stop loss is here. I got to get a 1.5R, so I'll just move this up to here because now this fulfills my need. Right? And it is true that fulfills a need. It puts you in a position where you have a quality risk reward. But the question is, and this is the common sense approach that makes me great at what I do. The question you want to ask yourself is, do I actually think price is going to go there? Simple question, right? It would seem like this is the first question we would ask in general, right? It would seem like this is the first question we would ever ask. But many people don't ask this question because they're too concerned with making something work. So they become blinded to the other stuff. But do you actually think that price is going to go there? And if the answer is yes, then that's fine. But here's the other question, right? if you thought, right, if Adam is doing analysis and Adam's analysis said, I believe that price is going to go to that location. Here's a question for you. Why would Adam's initial target be here? If that were the truth. If Adam's analysis said price is likely to go this direction or this level, why wouldn't Adam put his initial take profit there? Right? And when you think about it like that, it catches many people. We're like, yeah, you're right. I put my take profit here originally because this is where my analysis said that price was likely to go. You can't just all of a sudden change it. And because if you do, you're only changing it because you want to make the trade work. You're forcing the trade work, right? You're curve fitting in a sense. So it's always good to use that common sense approach and ask yourself, just slow yourself down and ask yourself the simple questions. Because we know that trading, you're typically in an independent environment. And if you can imagine us on a trade floor, right? We're on a trade floor. You guys are all working for me. You got your computers, whatever like that. I'm in the background, or in my back office, passed out off the whiskey, of course. And I get this little ding because it's like Adam placed the order. I'm like, huh? Adam again. What's he doing? Let me just make sure his order is right. And I see Adam, and I'm like, all right, look at his chart. Like we got a little screen share thing going. I'm like, why did he just move that? His target profit was there. Why did he just move it? I pull myself together, right? Slap myself a little bit. Wake up so you guys don't know I'm like drunk and whatever. I stumble over to Adam, like, Adam, why'd you change it? He's like, well, we had overlapping levels of structure, so I had to increase my stop. So in order to make it work, I had to increase my target. And I said, Adam, do you think that price is likely to go there? And it's that brief pause because we get caught up in stuff, right? It's that brief pause of having an outside influence kind of reminds you, like, hey, do you actually think we're going to go there? And Adam's like, well, now that you mention it, no. And boom, we stopped Adam from getting in a bad trade. The problem is, right, as an independent trader, we typically don't have those type of people around us. There's no one to question Adam. So he can get caught up in the moment. And that happens to a lot of us. He can get caught up in the moment without knowing, and he won't know until he does his review. So that's very important. So if I don't have a stop loss that works for me, to go back to the original question, I can't take the trade. Because I never want to take a trade where I am uncomfortable with my stop loss. My stop loss is my protection. If I am not comfortable with my defense, I am not entering a trade. So I would have to let it pass. Obviously, I can look for secondary opportunities to get involved, which may change the situation. But as far as the primary decision, I would have to pass.